A lot of people knock, but the reality is, since we are profitable and debt-free, it does set us apart. So we're not beholden to high interest rates and things that they have to deal with when you are debt-laden. We have enjoyed what we do, and that's probably the biggest thing, is that we all of us, the team has a passion. Our team is 17, 20 plus years with us. So we have the loyalty, it's a family approach. I worked for large corporations in the past where everyone didn't want to share information or didn't work as a team. And instead, I wanted the concept that people can actually develop, grow, do R&D. I come from a heavy R&D background as a coder and other systems admin over the years. And I wanted to build an environment that people felt comfortable sharing and not be threatened by their jobs. And so having that culture that people can grow, learn, it keeps everyone intrigued and together, and it allows us to keep growing. I think the biggest thing that sets us apart is our culture.
How is the company's mission different today than when it was formed?
We've always been in technology, financials specifically. That is our only vertical. We've never deviated from that. So we keep reinventing ourselves and staying inside of this. The mission was more of a trading floors and back office and trying to blend electronic trading into actually floor trading. Our focus has been into more of a hosting infrastructure, networking, market data, B2B, WANs, that kind of thing. So we've changed it from being a timeshare of technology into more of a infrastructure managed service provider. There was no one in our space when we first started. Everyone was doing the Arthur Andersen type hourly billing, and we came in with flat rate pricing. And traders didn't want risk. We basically de-risked them by actually offering a fixed price for tablets on floors, back office, and whatnot. And we built out a network between the 3 exchanges in Chicago and then tied everyone up. So all the options trading, we started in options in the options pit, and people were trading in the back office and hedging down into the pits.
How has your customer base changed?
It is different. Back in the day, there was a lot of locals and floor guys, and still large trading shops, and we still have a few of those same clients 25 years later. They've changed as well as we. At this point, it is more of a managed service environment where before we were very integrated. We still service the floors, one of the few people that still have technology on the floors and link them together and route their access to various places. We are now much larger, and we actually are providing quite a bit of services that's more of an incubator for us in managing our legacy clients.
Are there any asset classes you don't handle?
We're actually very diversified. So one of the strengths is that back in the early 2000s, we started expanding into many different asset classes, expanded out to New York, and then went worldwide. By having all those asset classes, as the markets change and maybe fixed income volatility dries up or whatever it may be, we've managed to stay profitable in all the years of business. So one of the few people that actually is 25 years of debt-free and privately owned, and that's a difference, and we've been able to always stay ahead of the curve. It actually provides us a lot of versatility and agility. When you need to zigzag, we can. If somebody needs to buy things, or a lot of, if you're privately held or through private equity, you're reporting to people, we look and see opportunity, and we want to build for capacity. So for me, the biggest thing right now is building for growth and be ready for growth. And that's probably the main thing that it's always set us apart from others, is being ready for growth.
How have you adjusted to the growth in options?
The main piece is be ready, and we are ready, and we've always been ready. Just having that bandwidth, the capacity. Examples are our infrastructure. Over the last 5-7 years, we've upgraded our backbone. We're running 400 gig cores in all the major markets, 100 gig lines everywhere. All the low latency routes that we can buy are put on there. Recently, we actually bought into the tier 1 spread line. So now we can actually route all the options, any asset class, at a 13.0 between the Chicago and New Jersey markets. And we have low latency lines into Asia, into Europe. Having that ability to grow. Again, the options in the last month, we have signed into over 1 megawatt of contracts for power, and that's just in Chicago. So we keep growing at that ability to have the lines, the bandwidth, the resilience, and power to be able to continue to grow.
How do you manage the growth of data centers?
We currently have about over 300 venues on our backbone, 44 data centers, maybe 17 plus countries at this point that we're in. So we've expanded that footprint, and we're able to provide that type of service. And again, talk about agility. Well, when our clients need something quick, we have it on our backbone. We can turn it up very fast and provide that in a manner they want, with high resilience, high dependency, that they're going to have products that work for them.
How do the tariffs affect your company?
You need to be smart. I keep saying be ready. Spent millions of dollars at the start of when I heard about tariffs. We were able to say, all right, let's buy. And we bought, and we have inventory of millions of dollars of gear in stock right now. So we're signing more power. We also have all the networking capacity, optics, everything. So we're good for the next year. Again, I'm not answering living a month-to-month, quarter-by-quarter type of environment. We can actually have in stock capacity and be ready when people need services, we can deliver them.